Okay, I think we're recording now. So my name is Barbara Clifford. I am one of the business advisors with the Business Enterprise Centre. I have with me Tony Wood, who is a fellow advisor at Business Enterprise Centre, and I have Peter Shepherd, who is an advisor, but also the acting chair for BEC. Is that right?
That's right. Thank you.
Yeah, I got it right? Good.
Yep.
Okay, fantastic. So what we're going to talk about today is, in this survival phase, for a lot of people, we have to have the conversation with those that give us advice. And sometimes going into that conversation, we don't know the questions that we need to ask that are going to serve us. So Tony, I'm going to ask you first, before we even go into that conversation with our financial advisor, you said to me before that we have to establish what that relationship is. So can you expand on that and what you mean by that?
Yeah, sure, Barbara. I think the most important thing there is understanding what your relationship is with your accountant and your bookkeeper, and how you utilise their expertise during the course of the year, or their services that you require, particularly at this time when everything's out the window. You know, businesses are struggling everywhere. So if you've got a good, strong relationship with your accountant and bookkeeper, you can ask them the questions. You can ask them to find out what you can look for, as in funding and support. And you can also then learn a lot from just having that conversation with those people about where your business sits right now. One of the things I find critical for most business owners is understanding your reporting systems, you know, your BAS, quarterly reports. But a really important thing that a lot of businesses don't do is they don't look at their P&Ls, their profit and loss, and their balance sheet on, say, a quarterly basis, and have that discussion with their accountant or bookkeeper. And ask the questions about their business. So you understand, you know, these people give you a report and you just go, yeah, that's fine, it looks good. Bottom line is, yeah, I made money or I lost money. But if you start to look at the intrinsics that are in that report about your expenses, your wages, and start asking a few questions on how you can tighten those things up, or how can I improve my cost of goods or my sales, you're then tapping into the proper resource that an accountant and a bookkeeper can supply you, and that's part of what you pay them the money for.
And I think I had a conversation too with my bookkeeper, who actually put it back on me and said, well, what do you want to report on? What information is, when I first started setting up my chart of accounts, she reminded me of how important not to just go with the generic stuff that was in there, but what was going to inform me about my business. And so that's where the advice, I guess, from your bookkeeper and accountant, you can have that conversation that you may never have had before. It might just be a periodic conversation, but now you can ask some of those questions like a crystal ball almost. What can you see about my situation right now? And what can you tell me?
Yeah, and I think that's the part of that process is it starts a business owner starting to look forward into their business as well, and it can pull them out of, as we all know, you get stuck in working in your business, not on your business. Just having those and logging in that to say, okay, I'm going to have a quarterly meeting with my accountant bookkeeper, and that's going to happen on these dates, and log that in. That starts you planning and thinking forward into your business as well on, okay, we had a really good quarter last quarter, how are we going to capitalise on that for this coming quarter? And I think that just helps get people into the pattern of understanding the financial aspects, the back of office of their business better.
Yes, and seeing some of those, actually looking at the flows and the trends and where are the peaks, and it's quite often not what you think. Yeah. And into that.
Yeah, and even as businesses mature, it's starting to talk about, okay, we should set a budget. We should be setting budgets for ourselves so we understand our sales. We put targets towards what we want to do. And that may be a sales target, it may be, and then there's expenses in there. How do we tighten up on our expenses, or what are we going to do with some of our expenditure that we can probably trim back on? you know.
And profit
So I think,
margins and on products and things.
yeah, your profit margins, you can talk about your cost of goods, how you rely on that. And then from that, you start to talk to your suppliers about, okay, what options have we got to get better deals or work better with our suppliers as well. So having that conversation and a good relationship with your accountant, I think, is really, really balancing for a business. And if you do that right from the start of the business, you'll find that maturity comes through in that relationship. Yeah.
So Peter, can I ask you now, in terms of the environment that we find ourselves in right now, what are the conversations that we need to be having with our financial advisors that are going to inform us to be able to crisis manage or to survive all of those stages that we talk about in the situation we find ourselves in now?
I think one of the main things is we need to make sure that we're on time with the submission of our BAS statement, for example. Get it in earlier and make sure you get it in so that if you are eligible for any of these Commonwealth grants that are being paid through the ATO, then the payments come through. For some businesses who have never received a payment from the ATO, they might need to make sure their bank details are in there. So their BAS agent or accountant can help them make sure that they've got the business bank account details there. So when the money is likely to come, it ends up back in the business's bank again. Or else there'll be a bit of a discussion. The ATO will need to send an email and say, look, we haven't got your bank details. I think secondly, it's an opportunity. I think accountants have been on their front foot. They've got out there and talked to some of their clients. So it's new ground for them. The accountants were previously pretty reactive. In this case, they've been more proactive and sending people newsletters and things like that. So I think the opportunity now is, like Tony said, is to keep that conversation going and perhaps not rely on them, but use your accountant on a quarterly basis rather than once a year just to press the button on the tax return.
And I know for myself, talking to my bookkeeper and my tax accountant, with the moment, even before we went into lockdown, I started panicking. When I knew what was coming, I freaked and went to my tax accountant saying, oh, the money's going to stop flowing. What do I need to say to the ATO? And she said to me, just stop. Just wait. Don't rush anything right now until we get the information and well informed. So they have been a lifeblood of information, like you said. They've been sending me information at just the right time for me to be able to do what I need to do. And you made a good point to me before, Peter, as well, is that people are not aware that the tax debt is independent of the payments that they're getting from the ATO.
Yeah,
that's right, and that's going to be important. I just had a couple of emails from clients in saying it will not be applied to the ATO debt. So it's meant to be cash flow money for the business. So really, the debt won't go away. Unfortunately, they're still going to have it, but at least the business will then get a bit of cash back in time.
So what are some of the other questions that we need? So the BAS is obviously important, but what other questions do we need to be asking our tax accountant, or what kind of questions might they be asking us?
One of the more difficult ones for some businesses is they want evidence of the reduction in income of 30%. And for large businesses, it's 50%, and for not-for-profit, it's only 20%. So it varies a bit. But I've had some tourist businesses that don't start employing people until April, and the tax officer asking evidence back in March, and so they couldn't provide it because they don't employ anybody, and they haven't had any real trading because of the season. So the tax office are allowing people to put a case forward and use another month as an example of where, as a result of government changes or impact of the virus, their business has suffered a loss, even though it might be in the future. So it can be an estimated loss in the future. So for a fishing tour operator who had 20 fishing trips in April, he's now not going to do any of them. He's going to be okay. He'll still get the subsidy. It might come a bit later. So what it'll mean is that for the job keeper, he's got to wait another couple of months until he can really show evidence of the reduction in income.
So I guess the sort of things that we need to prepare is what are the terms of employment we've had with people, with our employees. So how long they've been employed with us, where the best evidence might be of income if it is seasonal. Where the best.
What they've been asking for is a statement of a list of your employees at a particular date, and they could go back to the same employees 1 year before that. And that helps for the casual employees to make sure they've had 12 months continuous employment. In some cases, the tax officer asks for accountant certification to say it's accurate. So it's another role where the accountants are sort of more a trusted advisory like, or they're putting a bit more emphasis upon it. If they're a very small business, the tax office are accepting just records from the MYOB or Xero or whatever it is to say, this is my wages bill last month, this is my wages bill now. And with the single tick payroll, as the businesses pay people and the tax office have now got visibility of that, that'll trigger the refunding or the payment of the $1,500. So the business still has to pay the employee, but to get JobKeeper, the tax office will see that they've paid them the $1,500 and then send it back to them again about 2 weeks later, or what they're hoping for is 2 weeks.
That's a tricky situation because you have to have the money there in order to be able to pay them to get it back. That's really hard. And I know a lot of businesses, there's no money, money's just not coming in. So that the cash flow is really, really difficult. And I was talking to another small business where there's all of these different payments that structures with the bank. And even though they've put in an application to adjust their loan repayments, the fees are still coming out and the charges. And can you just hold off so I can have some cash to work with right now?
So here in the NT, we've been fortunate they've had the Business Survival Fund, and it's had over 500 entries already. And some of that money is coming out, and that's really money for that in between from the 1st of April until the 27th, until there's about 4 weeks where there's no income for some businesses. So the idea of the survival fund is that will at least pay the bare minimum of wages and some operational costs while the businesses sort out what they can afford to pay for a lease going forward and what they can have a negotiation with their landlord. So there's quite a lot to do for businesses. Some of that money's coming out now, and for bigger businesses, it's more anxious because they've probably got a bigger financial capacity as well. But so the ones we're majority dealing with are sort of less than 10 people. It's 10 full-time employees anyhow. And so in some cases, people are using a redraw on their personal loan, on their house loan. Sometimes they're just using credit cards. So people have been pretty flexible on how they're finding enough cash to keep employees paid and the bills up to date.
And that's, I guess, having the certainty that knowing, and that's the nature of business, isn't it? A calculated risk of how much of this is a risk. Both of you then, and whoever wants to answer this one first, in relation to creditors and debtors, what are the questions that we need to be asking our financial advisors around those? What would you suggest are conversations we need to have or things to think about?
Well, the first thing I do is I generally print off the list of creditors and see who you think you can delay for a while because they're a good one, or you're not going to buy from them again or something, but you need to get a handle on what the total amount is and then try and spread it across the cash flow for your particular business. So I would do that. From the debtor point of view, most MYOB and Xero accounts, you can have a list of debtors 30, 60 and 90 days, some of which we've looked at some businesses and they've got some they think they're never going to get now. So you have to really make a reasonable estimate of what's the best bang for your buck. I can perhaps get 20% from these ones and 20% from those ones, see if the business can pay us to keep a bit of cash coming in. But you need to keep some creditors online so that they will supply you, take away drink containers. Some of the wholesalers here moved away from having accounts and saying, if you want takeaway containers, you've got to pay cash for them. That was pretty tough for some of those small takeaway businesses or restaurants that are now takeaway businesses because they didn't have any cash.
Yeah. And I think that's it's important to have the conversation with both your debtors and your creditors, and as Peter said, look after your creditors and prioritise those that you need to keep working with immediately to keep your business flowing as it is now, however that may be, and to have that conversation with them, and then look at the next tier and okay, have a chat to them and say, look, things are tight. We can't pay everything. We're going to be a month before we can pay you any money. How's that sit with you? Have that conversation with them, and then in reverse, go back to your creditors, your debtors, and have that conversation as well. Is, look, you owe us this amount of money. We understand it's hard for you. Can you give us some so that we can pay some of our people down the line as well? So everyone gets to understand that the chain has to work for everybody, and just have that conversation and see where it goes from there. Then go back to your accountant and say, look, I've worked this out with these people, and this is how it's going to work, and then see how your accountant can work through that to give you some sort of estimate of what your cash flows will be like in the next, say, month if you went down that path.
I wonder too if there's also opportunity to look at things, particularly the subscription-based stuff, or where you're on payment plans with things or retainer-based situations where you're paying out a regular fee for a service for your business, but you're not utilising that right now. So can you drop down on your membership level, for example, because you're not taking advantage of all of these things? I was talking to a business the other day where they had been paying something like $3,000 a month to a marketing company that would do all of their follow-up phone calls and the outbound calls, and it would return on, but it would give them a return of something like, after that fee, the return was the $14,000 worth of income, but it was a $3,000 expense. And this is a business that's suddenly very quiet. So why did they didn't need to now pay somebody else to do those phone calls. They could actually be doing it themselves and save on that $3,000 and be making $20,000. And I can't count for $17,000 rather than $14,000, because they could actually in-house that now because they had capacity with the reduced flow in their business. And it's just not thinking that stuff through, of those things of what am I not utilizing, so why am I paying for it now? I was just thinking too about the data on my phone. When I was out and about all the time, I would chew through that and sometimes paying for extra, and now I'm not even using it because I'm in my home office and using the Wi-Fi. Of course, I'm not going to go there with the telco, but it just made me think, what are the things I'm not using in my business that I'm currently paying for as part of my plans?
Well, I can give you another example for larger businesses that some businesses are paying their workers' compensation on a monthly basis. So say a business had a $2.5 million wage bill, and they're a restaurant, so they might be paying 3% of their wages bill in workers' compensation. They've probably paid 3 or 4 months this year already at the higher rate. At the moment, they might only have a third of their workforce, mostly with the part-timers gone or the casuals. So their workers' compensation bill will go down. What those firms have done is ask their workers' compensation people to provide them a credit for the previous month to try and bring some money back in from bills already paid. I don't know how they've gone yet, but that was certainly their request. You're
going to ask. You don't. The answer will. Someone said to me, the answer will always be no unless you ask the question. So
at least what will happen their next month's workers' compensation, even if they don't get some of the previous months they've paid refunded, because they were operating in February and some of March, their next workers' compensation will be more closely linked to the amount of money they've got now. And if it's only $1,500 per person, and they've now only got 10 full-time staff, then that's quite a different figure for workers' comp.
Yeah, definitely. And there could be a whole range of other membership based that are based on the number of employees that you have. Workers' compensation is just one of them. It could be a whole range of other things.
So it's important to do a cash flow. So whether you get your accountant to do that, in a lot of cases, the business owner's best place to do it.
Yep.
They feel uncomfortable to do it because they just don't. It's one of those hurdles they've got to get over and say, okay, I've got to sit down with, here's what I did for the first 9 or 10 months of the year, and here's the next 3 months of this financial year. What do I think my income's going to be? Cost of sales is 40%, so I'm going to treat it like that. And here's my overhead expenses. And you go through each one of those and think, which one can I cut? And they'll get to debtors and creditors, they'll get to lease, they'll get to their phone bill, they'll get to the workers' comp or insurance. And there'll be some things they say, I don't need that. And so some businesses have just cut out the cleaner and perhaps save $300 a month, but the cleaner's not coming anymore.
Yeah, that's a good point. That's if you have foot traffic. And I think too, there's a lot of businesses screaming at, oh my God, this is dried up, but they're also not looking at, like you said, what expenses are not they no longer have. And I have to keep reminding businesses talking to them, saying, talk to your staff, talk to your team about what is it that you do really, really well, and how is that servicing the community? Because while there's been a demand for something and that's dried up, there's also another demand over here that you're not feeding. And so it's about shifting the resource or shifting the money to stop putting money into this thing that you can't sell anymore, and redirect it over here to grow this area of your business. And that's the other conversation, I guess, to have is, if you need to invest money into growing something, where do you get that? If you can't get it from within your business, where else can you get it in terms of funding and grants, and knowing how much that's going to cost?
So I have one business that's got a wholesale business. They're using this time to put all of their stock on the barcodes. Previously, they just got stuff in and they knew the cost, or they sort of knew the cost rather than anything else. But they're going to now do a completely electronic stock. So for them, they're going to come out at the end with the ability just to walk up to the counter and swipe the product and say that's what here's the cost. Whereas previously they'd have to scramble for an invoice or look at IBA, purchase 20 of those and divide it into this amount, so they cost me X amount plus some freight. So for some businesses, it's an opportunity to do a number of different things. I've got another one that's just walking out to the warehouse, and they're going to pull out all the shelving, get rid of all the cockroaches and everything else that's in there, and put it all back in a different order and make it a lot neater and easier to get to. And in some cases, throw some stock out and write it off. This is going to be a good year to write off some expenses like damaged or sun-bleached stock or something like that. Yep.
Yeah, I think that's part of the role that we do is leading people to that, to start thinking about those other things that you can do. Exactly what you were saying, Barbara, is these are the things that you can do that will help your business right now. And it may be, okay, use your staff to go out and clean up the warehouse and reorganise it, to look at your stock levels, to see what, and for the business owner's point of view, is have a look at the stock terms. What stock have you had sitting on the shelf there that you bought 3 months ago that is still sitting there and hasn't moved? So how are you going to clear that? But understand that you bought that at a price. You're going to have to clear it to either you're going to lose money on that, or you still make some money on it. So it's recalibrating the way some people think about their businesses right now, because they've got hopefully some time to be able to do that. And instead of panicking about things, focus on the things that are really going to work for you well in your business once we get out the other end. Yeah.
Awesome. Thanks, guys. We've covered quite a lot in all of that. There's a lot of that's very insightful for business in terms of preparing them for those conversations and allowing them to think about what they need to be talking about with their advisors. So thank you. Thanks for your time.
Thank you. Thank you, Barbara. Thank you, Peter.
Thanks very much. See you.
Thank you. See you guys. Bye.